Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global market reporter at Nasdaq. Joining us for the segment, we have Steve Sosnick, chief strategist at Interactive Brokers, to discuss if the Magnificent Seven needs a substitution or if investors are being too hasty. Steve, it's great to see you as always. Welcome back to Trade Talks. And I think this is such a great conversation to kick off the divergence between the Nasdaq comp and the Nasdaq 100, which you did work on last week, because so much of this is focused around the concentration of performance in the Magnificent Seven. But let's start with here. Do you think investors are being too hasty in terms of shuffling the deck chairs when it comes to the Mag 7?
Really, first of all, thanks for having me. As always, Jill, I always appreciate our conversations. I don't know that anybody's really, proposing this. I think I'm a little ahead of the curve. We'll see. If you know of anybody else, then I feel bad if I'm not crediting someone else's work. But my thought is last week I wrote a piece, basically, it's NVIDIA's market. We're all just, something like that. We're all just following NVIDIA. And it showed that basically as NVIDIA moved up and down, and it does move down, sometimes, the broader markets were really just following NVIDIA's lead. But one of the things I failed to appreciate was that Broadcom has really been keeping pace with NVIDIA very closely. I mean, to some extent, AMD has as well. It's been really a semiconductor-led rally, and especially since the Taiwan semi news that came out last week. But in general, one of the things I hadn't really appreciated is I did a normalized performance of the Mag 7 plus Broadcom plus the NDX since October 31st, which was really sort of the bottom before we turned around. And while NVIDIA is up about 46% since then, Broadcom's up about 45%. They've really kept pace with each other. And the other interesting thing, of course, is that because of the rebalance that occurred recently, Broadcom didn't get its weight cap like some of the other big cap stocks that were near the top of the list at the time. So it's actually, although about the 8th or 9th largest company by market cap, it's actually about the 5th largest by weight. So it's an interesting conundrum. Now, if you're going to keep it 7, I'm going to get a lot of pushback on that one, but I think the one that would need to go out would be Tesla. Mm-hmm. And over that same time period, Tesla's up 5%, which of course is not shabby. But the MDX is up about 20%. All the other Mag 7 components are up double digits. And the way Tesla's been acting recently, it tells me that there's some real underperformance getting priced in. We'll know for sure after the close Wednesday when Tesla reports. But the last 3 earnings reports, the stock's been down between 9 and 10%. I do think the market might be a bit more prepared for some disappointment this time, which could lead to a rally. But as of now, I'm thinking that Broadcom better defines the concept behind the Mag 7 than Tesla.
Yeah, and that's, I think, an important distinction for our viewers, of course, is when we hear the NASDAQ index being quoted, it really is the NASDAQ 100. It's not the NASDAQ composite, which is all of the NASDAQ listed stocks. So there's a big difference there in terms of how it's weighted, the methodology, the fact that all NASDAQ listed stocks are in there versus, the NASDAQ 100, which is X financial, which of course lends to the performance, right, or underperformance, depending on what cycle you're looking at. But that's really where you hear about the concentration of the Mag 7 and why you see the divergence between the comp and the NDX.
Yeah, it's actually quite stunning. They're sort of, like, if you watch general media, they sort of, fluctuate. Whether you really have to pay attention whether they're quoting the composite or the 100. Anybody in the business really focuses more on the 100. Although for years the comp and NDX had roughly the same level, so it was actually they were somewhat interchangeable for several years there in terms of not really knowing what someone was quoting. But certainly there's been huge outperformance from NDX over the composite. Now, that had been building over time. There's a couple reasons that I see behind it. First of all is just the stellar performance of the stocks that we've been discussing. But also to some extent, I think that's because of indexing. There's a lot more money indexed to NDX. Let's start with the ubiquitous QQQ, which is enormous. An ETF, of course, benchmarked to the NASDAQ 100. There's not that same kind of participation on the NASDAQ comp. So as money flows into the markets and people want to be exposed to tech stocks, that money tends to flow into something that's either benchmarking NDX like QQQ or benchmarking the S&P 500, which, by the way, has the same top tier of names as NDX does. So I think that explains a lot of the outperformance. I would like to see some of that gap narrow a bit. I think it would be a lot more helpful for the broader market if we could see some broadening of the rally, not just participation led by the top names. And last week we had some times where NDX was up and the Nasdaq advances less declines was negative on the exchange as a whole. So I do want to. I think it's always scary to sort of say, oh, well, let's revert to the mean. Let's sell the 100 and buy the comp. I don't know that that's the trade. Or if you do want to do it, I wouldn't hold out for them to completely narrow the gap, because I do think there's some structural stuff that helps NDX. But as of now, that outperformance is quite staggering.
All right, Steve, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.